All right, so I'm about to go over a couple trades today. Um, so this one was simple. This one was on British pound, right there, British pound, GBP, USD. If you're trading forex, this is what it is: GBP, USD. On futures, it's British pound. So let me just turn this off. Okay, so I mean, by now you guys should know what time I wake up. I wake up like 7, around 7, something like that. And yeah, so first we have right this high right here, because if we look over here, what's going on? We're trending. It looks like we're trending right lower to go lower. And if you want to go lower, what you want to see is stuff like this. Like for example, here it go above and take people out the trade, take liquidity. But the reason why you don't want to take this is because it didn't give you a convincing closure below the swing right there. This is not convincing, so you wouldn't take that, even though it did go lower. So over here, you see liquidity right here. The liquidity got swept right here on this candle, and I was not at my computer, so I did not see it. I seen it when I woke up. I looked on my phone. I immediately spotted it, and like I didn't get in here. Well, I didn't get in. Well, yeah, this is where I woke up around this time, and I didn't get in where I was supposed to, which it's supposed to be here on this candle. As soon as they break this candle, I was supposed to get in here, but when I seen it, it was already. Sorry about that. It was already on. Let me get this candle out of the way. It was already on this candle, and it was pushing. So I'm thinking to myself, okay, do I want to get in now or just wait, because I already missed my entry, which was here. And you know, on British pound, even if I get in late, the risk is not, you know, like super terrible compared to NAS 100 and gold if you was to get in late. So what I did, I just got in literally. I got in literally right here at the next candle break, which was this candle. As soon as, no, actually, I got in this one when it retraced. That's when I got in. So I got in over here, basically, like as soon as it retraced. So let's just say spread got me in here. So I got in like right there, and my stop loss was literally right here. Yeah, it, it put me in profit. Then, it started to play around, and there was news at 8:30. So this was the news right here. This candle right here. As soon as the news opened up, it pushed me all the way in profit, and my target was over here. I took partials over here, and the rest I just let it, do what it do to see what happened, and basically close it out around this consolidation. Once it pushed past here. So yeah, so that's British pound. Really simple. All right, we have this order block or supply. There's a gap right here. Okay, there's a gap right in here. That's the gap. There's a supply. The gap. So clearly we was sleeping at this time, 3:30. I went to bed real early. So all of this right here, I did not see it. So this doesn't even matter. At least for me. If you were trading London, then um yeah, you probably would have lost because, you'd have got in here, stop loss here, and then look, it have took you out. So yeah. But, if you put your stop loss at the top, because you can afford to put it there, because like I said, with GBP, um, with British pound, it's not like you're risking too much, right? If you're risking like 5, with me, I only did 3. I was only risking 3, so I don't know why this didn't change. Let me do this again. So I was only risking basically 150, because I wanted to keep like margin so I could trade other stuff. Because I traded this, and I had a position on gold, and I had a position on Nasdaq. So I was trading 3 things, and they all played out. So this is on GBP USD. I just broke down the reason why I took it. It swept liquidity, and then you got a convincing closure below this low with this move right here. That's a convincing, move, right? Because if we're gonna continue to go up, it shouldn't need to come down here like this. And then plus, like I said, we are trending lower. If I look at, I didn't even look at the higher time frame. I didn't need to, I just looked at the 15, and I just seen what was going on. Like I immediately seen this. As soon as I woke up, I seen this. I said, okay, I know what I'm doing today. Okay. So that's that. And yeah, it played out. It played out. I mean, it took a little while. This is the 15 minutes, so it took a little while. Um, but it played out. News helped push it in my direction, and yeah. But when news came out, what I did was I put my stop loss to break even. So only because at the time when news came out, I already hit a 1-to-1. Where was the 1-to-1? The 1-to-1 was there, and news came out on this candle 8:30. So this candle pushed me into to my 1-to-1 already. So at this point, once it started going lower, this candle right here, I just put my stop loss right here to break even. Well, it was a little bit above break even because commission. So, but basically break even, and I was just holding for news. I was, because you don't know which way news is gonna go, so I just kept it at break even. And fortunately for me, news pushed it in my favor, and yeah, it just news really helped out on this trade. So now let's go to NAS. So this was yesterday. You see that yesterday, Wednesday, 2:30 p.m. So obviously NAS gold, ES, which is S&P 500. I think US30 as well. But all these assets, they were on all-time highs, and I mentioned this in the previous videos. When we are at all-time highs, you want to be careful, because they're not just going to let you keep buying and then just keep going up. That's not how it works, right? They have to come back, and basically it's like the market has to breathe. So that's I guess the easiest way to explain it. So the market right now is breathing, and yeah, I mean, the fact that we took this low. We closed below this low, and this is convincing. I believe maybe not tomorrow, but for sure, you know, because right now it's April 18th, so the rest of the month could be pushing lower for, these lows, and then, you got inefficiencies over here, here, so we could be pushing lower. That's the 4 hour. Oh, well, it's the futures chart, so it looks kind of weird, but trust me, I seen it on my other monitor, and yeah, we might be going lower, but we still have to wait for the confirmation. So yeah, so we're going lower. This is a clear indication of prices going lower. This move right here, and all I did, I just got 50%. Where is the 50%? I did not do this, right? Because what's the likelihood of it pushing all the way down here and then coming all the way back up here and going lower? Not likely. So I took this swing high, and I know it don't look like a swing, but it is a swing. From there, that swing high to this swing low, and above the 50%, there is our zone right there. You see that? That's the zone. I marked it out. This candle kind of, gave me a scare because that pushed super heavy. And of course, I got in right here. I got in. No, I did not get in right away. I did not get in right away. I am not even gonna lie. But yeah, it pushed super strong, and then I'm like, okay, it closed way too deep in the zone. I don't like when it closed like that. But then this candle pushed up on 5 minute. It looks, let me see. I was looking at multiple. So yeah, I seen this on a 5 minute, and I seen that it did not go above. You see the swing right here? So that's what gave me the confidence to take it. I took it basically where I would have took it anyways. Like once it started going down, I just took it, and my stop loss went above here, right? If it would have came up there, then it would have just been a loss. Because if it would have came up there, then I would assume that it would have came all the way back up here. So, on the 15, I took it on the 15 minute. It was over here, and then I was aiming for here. This sell side liquidity. I was aiming for here, but what time this was? 2:45. So I guess it didn't have enough energy to go down there, within the time. So I closed it. I closed it literally like, I closed it on, I believe it was this candle. So it was like down here. Once it got back to the rejection block, I just closed. Oh yeah, cause I just seen it was just doing this. Like you see that? Wick, body, close, open, wick, push up, open here, wick up, come down, close. So I just didn't like it, and I just closed it. Like once it basically pushed past this body, I just said, okay, let me just get out the trade. So I mean, this trade was still profitable. It was basically a 3 hour trade. Yeah, it was basically a 3 hour trade. So yeah, that's that NAS trade, and yeah, NAS did not come back up there. So that gave me, obviously, gave you information that we're gonna go lower because it failed to come back up. If it was gonna go higher, it would push these highs and potentially these highs and then go up. So it didn't. It pushed this liquidity, the internal liquidity, right? Because what I say, it has to take out some, it has to take out traders. So if you're looking for sells, trust me, it's traders over here that's looking for buys. So it has to take people out, whereas, like the interested parties on the opposite side of your trade, and it took them out. All right, so wait, because this one I took it on a 5 minute. Let me find it. Where is it? There's a 9. I think this is it right here. Yeah. Yeah, I got this one on the 5 minutes. So this was the order block. I didn't hold this trade as long as I wanted to. I got out like, when it pushed my original take profit from the previous day. So I didn't hold this as long as I wanted to, but yeah. And then obviously this is let me go on the daily so you can see what that is. That's what it is, that low right there. I wanted it to push that low, and it was able to do it today. So let's go back to the 5 minute. Yeah, so I seen this, and if you want a simpler approach to it, you could clearly see, right? It's literally just like the same thing that I took on British pound, right? There's a gap. You see this right here? There is a gap right there. And if you go from this candle's low to this candle's high, there is a small little gap, and it tapped it. So, okay, what time is this? 3. Yeah, so, basically, once it came back to the order block, I got in. I deleted like the tool that I had, but I got in. When did I get in? I think I know it wasn't at this time. I got in like around 7, like around this candle right here. That candle right there. And then my stop loss is basically, I think my stop loss is up here at this high. So I got in there. It pushed me in profit, put me in drawdown, put me in drawdown, put me in profit. And then, the rest was history. I had my, my take profit right here. Where was the news? Yeah, this was 8:30. This was news right here. And then within here, this was another trade that could have possibly taken as well. Right, it's real subtle, but it's right there. That gap, because now let me do this and delete this really quick. So you see this swing, right? It took liquidity right here. That's a swing. And then, so from that swing to this swing, let me just do that. Above 50%. That's the gap. Now, the only thing is that would have been kind of, iffy. If, you're a new trader or whatever, because, it could potentially just go right back up here, tap it, and then go lower. So, that's the only thing you would have to worry about. But I got in earlier than that. And I was just holding it. And like this zone right here, if it would have closed above the zone, then I would have been worried about my trade. But once it pushed past here, what I did, I moved my stop loss to break even, and it became a risk-free trade. So you see this low right here. Once it broke this low right here, I instantly put it to break even. And the 1-to-1, where was the 1-to-1? Yeah, the 1-to-1 was here. If you was to take a 1-to-1 trade, that was the 1-to-1 trade. Let me see. Did I put it at break even at 1-to-1? I probably did. I can't remember. But, regardless, the trade played out. And yeah, then you see it came right back up. Swept all this liquidity right here. Because like I said, it has to sweep liquidity if before it does like the huge move, like the move that you want to be in, is gonna take liquidity. That's what it's gonna do. It's gonna take liquidity, and then they're gonna push it in the direction that they want to push it in. Now, I've been noticing like this pattern right here. Let me look at it on the 1 minute because I did not do that today. I stayed away from the 1 minute today, but you can clearly see on the 1 minute there's liquidity that got swept right here, and then a convincing closure pushing it lower. Only thing is there's no entry. It did not come back, right? Because if you was to do this low to this high, you could get in at this order block, and this gap is literally right above the 50%. So it never came back there. And yeah, but I didn't look at the 1 minute today at all. So I just stuck to the 5, well, mainly the 15 minute and the 5 minute. On the 5 minute was later in the afternoon. I was looking at it, but when I woke up, I was just basically paying attention to the 15 minute. So on the 15 minute, this is what I seen. Basically, this is what I seen, and this is the reason why I took the trade. Right there. It traded up into it, right? Because when I seen on the 5 minute, I had it out, and then I was getting ready, to take my daughter to school, washing my face and everything, and I liked what I seen. You know what I mean? I went to the 5 minute, I looked at it, glanced at it, and it's like, okay, this is a 15 minute. We clearly pushed past swing low. That's a convincing closure. You see that convincing candle? That's a convincing closure. If you want to do, where's the 50% from swing to swing? We clearly have a zone right here, and there's obviously a gap attached, but I wanted to see it come all the way up into here. And obviously, on the 5 minute, order block is attached to the 15 minute order block. And that's why I wanted to, basically take the trade. So this is the time frame that I was looking at, and which is why I was confident in, holding this, even though there was news coming out. And today news was, I think, unemployment. Let me double check. Unemployment, red folder news, high impact. Yep, unemployment claims. So now let's go back. So on the 15 minute, right, we got that going on. So I've been noticing, because right here, I thought it was going to go higher and at least touch this and come back, go lower. Because when I looked over here, like, yeah, there's a little gap here, but then it overshot it. I'm like, where did it go to? It went to this order block here. But the thing is, personally, I don't like it because there's no gap attached. But there is an order block right there. And yeah, but once I seen this candle come right after it, I knew they was gonna go lower, because with my history of trading, every time stuff like this happen, like, they're struggling to go up. You see these little small candles, and then boom, you got that. Oh yeah, we're going lower. Like, the only thing is that there's not really like a clean setup right here. So, but they're going lower, and yeah, so I was anticipating them going lower. So what I did, you know what I mean? Matter of fact, let me not even mention that, because I don't want you guys to even do that and then think. Yeah. So just know I took a trade somewhere and it pushed lower. So yeah, but yeah, and then in here, I got in again right here. I tapped it, just got in, and I wanted it to go lower past here. It didn't do it. It traded up, came back, was playing around. So I just got out while it was coming back up, and I mean, it played out, but I didn't want to go through this emotional roller coaster right here. So, you know, just, I mean, it still played out, but it's just, yeah, that was, consolidation, going back and forth. I'm not with that right now. So yeah, I just, close that. And then I also had this marked out. It pushed up. And, I wanted to see if it was going to come back and take these lows, and it did. But I also was looking for it to trade to that low that I showed you. Where's that low? Why can't I see it on here? Let me see on my other monitor. Because on my other monitor, I'm looking at the actual forex pair. Okay, let me matter of fact, let me just pull this up really fast. This is what I'm looking at on my other monitor, because on here we have more data. You see, like there's no holes in between. So that's what I'm looking at. So I was looking at it to take this low out right here. You see how close it was? It never got there, but that's what I was looking at. Right. So now we go back over here because I'm trading on futures. So let's go in Q. Hold on. Was this the one I was showing you guys? Yeah. So let me go to the 1 hour. You see how different it looks? So basically this low right here, you're looking for it to take that low out, even though it looked different on here. Same low. But yeah, it didn't do it. So I'm assuming tomorrow it's gonna, obviously retrace. Hopefully you come into here, give a better entry, or here, would be a really good entry as well. Right? Maybe it come here, maybe it tap this, and then that'll give a really big move to go, lower. So that's nice. On Nasdaq, that took a long time for Nas, talking about Nas. But let me go to gold now. And gold, I took gold as well. So where did I take gold? Where is it? It's this one right here. I know I have much stuff marked out, but don't worry about that one. This is where I took it. So right here. Wait, and did I go over why I took this trade? Oh yeah, I did. I said it, took liquidity, came back. Yeah, I talked about it. Okay, good. So here, gold, gold is on a uptrend, crazy uptrend. So I want to be taking buys. Okay, I want to be taking buys. I took a buy here yesterday. No, what was this? I know this was today. Here is where I took the buys. I took the buys, but I did not hold as long as I wanted to. Just because it was being iffy. All right, you see this? I don't want to deal with that. But it's still a winning trade. It just didn't hold it as long as I would like to hold it. All right, because when I got in, pushed up, created this on liquidity right here, pushed back down. All right, got in another entry, and once it pushed that, got out. And the only reason I got out is because I got in on this retracement, one down here. Now I got in another one here, so that got me in for two. and this is gold, right? So this was enough. Then it created, you know, well, let me skip over that and go to this. So we have this right here, right? You see this order block, demand, whatever you want to call it. We pushed up above. What's this right here? What is this? Break of structure. You see that? It broke structure. It has a obvious gap in between right here. That's the gap. Came back. And I know these videos are long, but I mean, you can't learn from a 5-minute video or 15-minute video. I'm going through it, and hopefully you got the patience to watch and learn, because this is the same way how I had to learn, going through and watching, like 1 to 2 hours worth of videos. And it wasn't just one video, it was multiple. And I had to put in multiple hours on the charts as well. So yeah, hopefully, you got the patience, because without the patience, trading won't work. So yeah, this is the order block, the demand. There's your breaker structure right here, a convincing candle. You see that? Convincing with the gap. It has to have a gap. Came back, tap, and this is where, well, I actually missed this first entry, right? I seen it playing out, but since I missed it as soon as, so this is where I was supposed to get in right here. No, right here. So as soon as it break this candle on this candle, I was supposed to get in. But since when I looked at it, the candle was already up here. So if I would have entered, I would have got in somewhere up here. So I'm like, I don't want to have this bit, you know what I mean? And then if you do the math, look, that's not even a 1-to-1. So I'm like, I'll pass on that. So once it came back to the entry. You see the entry would have been right here. It came back and pushed past the entry. So once it started retracing a little bit, I got in right there. Got a better entry. My stop loss go below the lowest, on the lowest low in that, in this move right here, and got a better entry. And you see, good thing I waited, because it took off. It definitely took off. What time was this? 9:15. Where's 8:30? Yeah, 8:30 was right here. It literally, I was just like face palming right here, because I could have closed here. Could have closed there with a 3R, but then I'm just thinking, okay, maybe we're gonna go higher. Let me just hold it. Came back, face palm, and then yeah, it just, so I didn't hold for all of that. I just basically got out, once it poked its head above this line, basically above, took this liquidity. I just got out. So yeah. And yeah, that's the reason why, this was a good trade. It market structures, broke, break of structure, right? And then if you wanna, take it a step further, you got right here. This is also liquidity right here. It took liquidity, right? You see that? I know I didn't mention it, but that's what happened. It took liquidity, break of structure, and yeah, take off. So now this was another zone that I seen, and it literally went to it. It overshot it a little bit, but once you guys should know by now, once it starts to retrace a little bit, that's when I like to get in. It has to show me that it's not willing to go lower, and then we have this order block. It's not willing to continue to go lower. It starts retracing, is going back to the 50% of the box, okay, I'm getting in. And then, um, I was assuming it was going to come up here, but once it started to, so once this came up here and then this candle broke this candle, I mean, that's enough. I mean, look how, like, that's enough for gold. And then, there's another move. I didn't take this move, but I had it marked out. I just didn't take it just because I didn't want to have, risk giving profits back. And then, gold wasn't really moving that much anyways, but I had this marked out. And this zone right here, this is just an hour. That's an hourly, which is why I had it. But, it looks better on the other one. So let me go here. Where's gold? Let me see. I go to my other screen. It's on metal. Where is metal? Actually, let me see. Oanda. So gold is on Oanda. Where is gold? Why is it not here? Let me just type it in here. Where is Oanda? Actually, no. AUUSD. So what was I looking at? Yeah, the hourly. Okay. You have this right here. And yes, when I'm trading, I have my other screen. I'm looking at the other screen because my other monitor is, I told you guys, it's a curved screen. It's like 55, 60 inches. So I could literally have two, like I have a split screen like this. I have a split screen like this. So, but on there, it show more data when it's split screen. You see out here, it's super small. On there, when it's split screen, I see all the data. I can see the 1 hour. I can see where I'm at in the 1 hour. I got the 5 minute on another one. I can see where I'm at on the 5 minute. I can pull up a 30 minute really fast. I could pull up the 4 hour, and I could do, so it's just more convenient. But yeah, we have this gap right here, and then right here, if you look closely on the hour, this, swap liquidity right here, which is what I was looking at. This swap liquidity, and then you have a clear break of structure or market structure shift, convincing closure below this low right here. Let's just put market structure shift. Let's try to move it really fast. I know some people don't have the patience to watch, but market structure shift below the lows clearly right here. And I just look for the gap. There's the breaker right here, and we're in it. Even though it overshot it, right? Overshot it. I knew that this was a good, what's called, this was a good area, right? Because if we and plus this is the 1 hour, so the 1 hour is way more stronger than any other time frame, below it. So anything below this, it's stronger. So I mean, it should hold up if you was to drop down. So now we drop down to the 15 minute, right? So now you just want to refine it. You don't want to take this huge, take it right here, right? Because I mean, look what it did, right? So now you just want to refine it. If you look closely, there's liquidity right here. There's liquidity. Let me just extend that right there to liquidity. Right there, took it. And yeah, so now this is the breaker, right? This is the breaker. There's a gap attached, even though it's a small gap, but it's still a gap that's attached to the breaker. You see it? It came up all the way in here. And then that's when you could have took the trade, you know, if you wanted to. I'm not telling you to take a trade. Remember, I'm not a financial advisor. So, um, you know, trade this on your demo account, not your real funds. Okay. But yeah, and this was a real like ugly trade if you was in it, but you know what I mean. I didn't. Let me go back over here. Was it this one? Yep, this one. But yeah, I had it marked out. This is the 1 hour zone that I just pointed out, and I mean, this would have been a decent trade, right? You took this trade right here. You do take that. You could put your stop loss right here at this high, and yeah, you just aim for here, which would have been like a 3-to-1. And if you were somebody who wanted to put it above the swing, that's still a 1-to-1 trade, so that's good. I just didn't take it. What time was this? Yeah, 3. Yeah. I don't like to, when I come home, I don't like to jump on the charts and just take a trade. Like, because I notice whenever I do that, I might lose. So, but yeah, those are the trades for today, April 18, 2024. It was, the market was, good today. The setups played out. Yeah, the setup played out. I gave multiple setups, but I was mainly looking at the 15-minute because I don't, looking at the 1 minute, there, you know, there's a lot of noise on the 1 minute, and you could avoid a lot of, just losing trades if you, just stick to, a higher time frame. So that's what I want to, show and illustrate in these videos. But you see, even on the 1 minute, there's trades. You see this trade right here, um, literally right there. And yeah, I know, yeah, I spotted it kind of quick, and some people may not be able to do that, but with time, you're gonna be able to do it, real easy, and probably better than me. So yeah, and yeah, this trade played out definitely. Could have ventured here. Only thing with the 1 minute is where you're gonna put your stop loss. That's why it's best to trade E-minis. If you trade the 1 minute, you just trade micros, not E-minis, and then that way, it'll be like basically half of the risk of these right here, right? These are E-minis, basically, and when I want, when you want to control your risk, you just go to the micros. Well, you want to control your risk regardless, but when you don't want to risk too much, just go to the micros. And because let me just give you a example. So let's say you entered here. Where are you gonna put your stop loss? Let's put it at the swing low, and let's say you was aiming for that right there. That's a 1.7, well 1.8 to one trade. You risking one to make 1.8, and I mean, this was decent actually. You risking 400, that's decent, and to make 700, that's decent. So I mean, in this situation, it would have been okay, right? Would have been okay. But yeah, even on the 1 minute, you can see it. I mean, it's there, same thing. You just gotta be patient. It's just that the 1 minute it moves super fast. I know people won't be able to just come here and pick it up right away. I mean, it looked like, I mean, look how it look on the 1 minute, right? But it's the same thing. But today I was just looking at the 15-minute, 5-minute. Yeah, obviously I got the hourly on my other monitor. So yeah. So now let's look at DXY. That's the dollar. Okay, let's look what DXY has been going on. So DXY been pushing. Okay, this is US dollar. I explained it on previous videos, so if you don't know, just go back and watch. But as you can see, so with the dollar going up, NAS goes down, ES goes down, and where is US 30? US 30, you're somewhere over here. Where is it? There we go. Dow goes down, dollar goes up. All of these things, the indices, they go down. That's what happens. Because they're going against the dollar. Okay. So same thing. Swiss, I like Swiss as well. You see Swiss, it's going down. It's going against the dollar. Down. You see this? Oh, you see the trend now? Do you see the trend? Everything is just going down, come against the dollar. I already showed you guys Dow. I see yes. Where's oil? Down. So this would make it pretty easy to trade if you understand the dollar. And you don't need to, go down to the lower time frame and try to find. No, what I do, I just keep it on the 4 hour on my other monitor. Let me just bring it up on my other monitor. I just keep it on the 4 hour. I got the zones marked out on my other monitor, so here it looks plain, but trust me, I have it marked out on the other one. All the zones that I'm, that's sensitive in my eyes and stuff like that. But there's the right, there's a gap right here, and obviously, if you wanted it to go higher, you would want it to be something like this. And this is basically cutting through the middle, which I don't really like, but I mean, it still respected it because, they're pushing the dollar higher. I mean, what else do you want me to say? They're pushing the dollar higher. So, everything else, well, I guess besides gold, right? Gold is going up. So yeah, the dollar is going up. It's showing you all bullish tendencies. You see that? Took this liquidity. As soon as it took the liquidity, played around, then just went up crazy, shot up. So yeah, the dollar looking super strong. We have this high right here. We got this high right here. You would, well, not tomorrow, but you would expect for it to trade up there, eventually. Well, assuming it can break this high. If it breaks this high, which I can, which I'm assuming that it's going to do because, they're pushing the dollar higher. So if it could break this high and I want to see it like close above the high, then definitely trading above here, meaning all of these continue to go lower. So there you go. Yeah, this was a good, lecture. 50 minutes, but I'm not coming out here and just talking nonsense. I'm giving you a lot of information that I wish I had right away when I was starting to trade. But no, I had to go look for it. I had to go fail before I got information that I needed. So yeah, just the information. Hey, you could choose to listen to it. You could choose to if you want to, but if you don't, then that's fine. But yeah, there you go. DXY. We'll see what it's gonna do tomorrow. It could just consolidate. Look what it's doing. It looks like it's about to, it took a liquidity here. That's a circumference enclosure below here, but the overall move is uptrend. So what we could see is it consolidate. It could push here, depending on, there's 1 hour left on this 4 hour candle, right? And then it could just push lower into here because there's an order block right there. And then if you want to do supply and demand, there it is right there. So, but if it comes all the way down there, I'm assuming it's gonna bypass and cut into one of these gaps. But I don't see them pushing the dollars strongly, like too low. I don't see them doing that. You know, we're in an election year as well. So, you know, but yeah, that's it for now. 50 minutes. Um, but yeah, I think this is a real short video. I mean, you know, to me, that's a short video. I mean, talking for 50 minutes is, yeah, super long, but as far as the knowledge, you know, yeah, it's short. You know, I know, you know, like I said, you guys may want a 5-minute video, but this is how you're gonna learn, by going through it, watching the video, go through it, and go on your own charts and spot these things, because you can spot it real easy, right? You can spot these things real easy. So, right, you see this order block right here, and you see how the market is stalling out, right? You see how the market is stalling out, right? When it touched that order block, you see it. So yeah, these are, you know, things that happen all the time with the market. Now, obviously, you can't just say, "Oh yeah, this is a order block." No, convincing closure, gap, and you see what's going on. Now we'll see what happens. Um, you know, would it go lower or continue higher? Now, what I want to see, if I was to, you know, buy on NAS, right? Because if dollar goes lower, NAS should go higher. ES should go higher. Dow, you know, which is US 30, should go higher. So you would want to see it break a candle low. Like I said, you would want it to show you that it's willing to go, well, in this case, dollar is willing to go lower, right? You would want it to take out the, well, let's just call that liquidity. You would want it to go and take liquidity, because remember, this is on the 1 hour. I'm trading on the 15 minutes. So even if it push just a little bit and take these out, right? Because if you look really, really close, and I know I'm kind of going through really fast, but we look really, really close, right? Because what could happen is it takes this out, right? This little move that's on the 1 hour, that looks little, it's a massive move on, you know, the 15-minute, and well, let's just go here. It's a massive move on a 15-minute, and you know, things like that. So even though, you know, on a dollar, it doesn't really, you know, look like it, but it's only because it's consolidated on the 1 hour. So yeah, but you know, anyway, yeah, there's a gap, there's the order block, but there's no gap that's immediately attached to the order block. So we could be seeing price go low potentially, because this is a 4-hour gap. So this one should be stronger than the 1 hour. But like I said, it's the end of the week, and it looks like they're going to just, you know, consolidate, you know. So yeah, there you go. That's an extra 5 minutes. No extra cost. So yeah.